Good morning. Welcome to Nasdaq IR Insight Live. I'm your host, Will Briganti, here at the Nasdaq market site in Times Square. My guest today is Tamar Essner. She's a senior energy analyst at Nasdaq IR Solutions. Tamar, great to have you back on the program.
Thanks, Will, for having me.
All right, so happy Thursday. Obviously, the market's down a bit today, but we're here to talk about commodities. So let's talk about energy. You've mentioned in some of your reports this week that you're looking at a lot of factors, geopolitical, some of the situations with M&A and other sort of OPEC issues. Let's start with geopolitical. Let's talk about Iran.
Sure.
What do you got for us?
All eyes are on Iran right now. The president could withdraw from the Iran treaty come May 12th is the deadline for looking at sanctions. The JCPOA, the legislation with the nuclear agreement, is very complicated. So there are sanctions to be renewed in May, but then a stricter round of sanctions that get renewed in July. So potentially, if that happens, if the president does not recertify the sanctions waivers, we could see a pullback of Iranian barrels from the market, and that would be a bullish factor because there'll be less crude available to the market.
Sure.
There's also the situation in Venezuela where
Yes.
production is deteriorating rapidly. We've seen Chevron and Halliburton talk about reducing their operations, taking personnel out of the country. So it will be really difficult for that country to have a turnaround, and we expect that the production will continue to decline, potentially up to 800,000, even 1 million barrels by the end of the year. So that's another very bullish factor of supply that's going to be taken off of the market.
Right. Okay, and then let's talk about what's going on with, you had mentioned in your report something about China and Europe, but then also OPEC. So let's move to that topic for a bit. What's happening with OPEC? What should we be looking at?
Sure. So OPEC has a meeting coming up in June. There's been a lot of rhetoric coming out of the Saudis about extending the supply agreement, not just for another year, but potentially for decades, that they would be more actively involved in managing the market. However, we've seen in the past that there's been a dislocation between what OPEC members say and what they do. And so OPEC's always been in this very delicate balancing act, focusing not only on price, but inventories and market share. And as the price of oil goes up, the incentive for cheating gets higher. And so we're seeing that there's diverging goals and incentives for the various members. So I think Russia needs a price that's a little bit lower. Saudi is talking about a price in the 80s. They're very much focused on their IPO right now, and so a higher oil price will help that IPO to go off more successfully. Russia's very focused on not losing market share to shale members and other players. So not really clear if OPEC will be quite as effective in a higher price environment as they have been in a lower price environment.
Let's talk a little bit about sort of your outlook for oil, both the benchmark U.S. rate for gasoline and then the Brent. So what are you seeing in terms of oil price outlook?
Well, the market is fundamentally constructive. I mean, supply demand are largely in balance, so the inventory overhang that we've been talking about for the last 3 to 4 years is largely dissipated, and demand is really good around the world. When you add that into a geopolitical backdrop, which is broadly constructive, I mean, we talked about the situation in the Middle East and Venezuela, but we didn't really get into with Iran, but we didn't really get into the situation with Saudi and Iran, which is another potentially bullish force in the market. So we think that prices go higher from here. That being said, there are always the market has its fair share of bearish indicators as well from a technical perspective. There's a lot of longs in the market, so near term we're poised for probably some consolidation. You have to realize oil prices have tripled since the lows of February 2016, so definitely any opportunity to take profits, I think that investors will do that.
Okay. Last question here is some of those technical headwinds that you just mentioned. Anything that you can elaborate on that our viewers should be paying attention to as they think about, even here in the U.S., the sort of summer driving season? Anything that we should be looking at in terms of technical headwinds?
Sure. Well, just quickly, you made a really good point about summer driving season. As the oil price goes up, that starts to become demand destructive, and so people start to pare back, and we've already started to see that a little bit as gasoline prices have gone up. Motorists have pared down their mileage. So that's just one one point, but onto the technicals. So the strengthening in the dollar is a technical headwind, and some of that's related to the headlines coming out about trade war concerns. So strengthening in the dollar, rising of U.S. Treasury yields going along with that. All of that should dampen the outlook for oil, at least in the near term. And anything that materializes with a trade war, that would also be bearish for oil demand. So that's something to watch as well.
Awesome. Well, thank you very much, Tamar,
Thanks
for
for
that
having
terrific
me.
insight. Thank you very much. Ladies and gentlemen, this was Tamar Essner, Senior Energy Analyst here at Nasdaq IR Solutions. For more information on Nasdaq's energy solutions, be sure to visit our website, business.nasdaq.com, and you can find the dedicated page right there. We appreciate you tuning in to this episode of Nasdaq IR Insight Live. Thank you so much for tuning in. We'll get back to you next time.